All right. We don't talk a lot about oil recently. Right now, we're seeing oil move to the upside on potential sanctions on Russia and sanctions on Venezuela. Does that change your view of the energy sector in any way? Yesterday, we saw every stock in the energy sector close lower. It closed down about 3%. Does it reshape any views for you?
I think it's still a little bit too early to tell on that. I mean, we're certainly seeing moves this morning on that news. And it's definitely something to watch. But right now, it doesn't make much of a difference. I think where it's more impactful is if we see prices continue to move up, what effect that will have on inflation, which would be more of a concern.
All right. We were just talking about the Mag 7 just a short time ago being a bright spot in the markets. News out, Amazon and OpenAI considering not only a funding deal that would value OpenAI at the low end at $500 billion, but also OpenAI buying some of those chips from Amazon. So we're seeing, again, just this, we're going to be using this word a lot today, disruption in the chip space. There's also, I think, possibly some questions about circular funding here, the fact that they're looking to get funding from Amazon and also buying their chips. Is that something that you're going to be looking deeper into when we're talking about the Mag 7 and the chip trade?
Yeah, absolutely. I think that's been a big part of the narrative over the last couple months. I mean, this whole year the markets have been driven by tech and AI, but now the concerns around the circular financing and all these deals that we're seeing between these companies. And we've seen some of that come back down, right? We're seeing differences. Before it was anything tied to AI was doing well. And now it's more looking at, winners and losers. And I think we'll expect that to continue, that it'll be, more company specific as far as who's going to be the ones that excel going forward.
So, RaeAnn, we got some new information from Bank of America out as their flow show. They say biggest U.S. equity outflow in 6 weeks led by the hedge funds. They're looking at consumer discretionary outflows over the last 2 weeks. Biggest sales in about 4 years. Are you concerned about the consumer right now? Are you worried about the labor market and the ability of people to spend beyond the holiday season? We continue to get this confirmation they're going to spend during the holidays, but what about after that?
Yeah, consumer spending has continued to be stable. So even though we're seeing this bifurcation in the market, and there are very big differences between the high end of, higher income households that have really benefited from rising home prices and rising stock prices, and the lower income that have been more impacted by higher prices, the inflation, and slower wage growth. So that has definitely been a theme. But the spending has held up, and it's continuing to propel the market. And we're seeing the spending on the corporate side as well, and all of that is supportive of the economy. And while there's you can't really argue with the trend that the labor market is slowing. The rest of the economy has been holding up, and corporate earnings are strong. Profit margins are, at record highs, and there are a lot of reasons why we still think that we're still optimistic for the path forward.